Welcome to our exploration of emerging markets. These nations are marked by rapid growth and industrialization, making them dynamic players in today's global economy. First, let's define emerging markets. These are countries undergoing significant economic progressing from developing to developed status. They present unique opportunities and challenges for investors. Why are these markets essential? Simple. They hold the potential to reshape the global economic landscape. Emerging markets account for a significant part of global growth, contributing to diverse investment portfolios and offering new consumer bases. As we dive deeper, you'll gain insights into the extraordinary possibilities and inherent risks of investing in these regions. Ready to discover why emerging markets might be the next big thing in your investment strategy? Let's embark on this journey together. Stay tuned as we uncover the vast potential and critical considerations of emerging market investments. Welcome, and thank you for joining us. Today, we embark on a journey to explore emerging markets and why they present a compelling opportunity for investors. Emerging markets are evolving rapidly, offering high growth potential. These markets encompass nations transitioning towards becoming more advanced, both economically and industrially. Investing in these markets allows investors to tap into substantial growth opportunities not always available in more developed economies. Beyond growth, emerging markets provide excellent diversification benefits. By spreading investments across different regions, industries, and asset classes, investors can reduce risk and enhance their portfolio's resilience. Diversification isn't just about adding different stocks, it's about exploring completely new markets with unique characteristics and growth drivers. Additionally, accessing new markets means participating in their economic transformations. This access offers the chance to be part of the unfolding economic stories of countries on the rise. From technology and infrastructure to consumer goods, emerging markets are teeming with opportunities just waiting to be seized. Stay with us as we navigate through the promising yet complex landscape of emerging markets. The potential for your investments is vast, and understanding these markets is key to unlocking it. Welcome back to our exploration of emerging markets. Now, let's delve into the key investment opportunities that present the highest potential for growth. Emerging markets boast several promising sectors, but three stand out in particular: the technology sector, infrastructure development, and consumer goods. First, let's consider the technology sector. With rapid advancements and increasing internet penetration, technology companies in these regions are poised for exponential growth. We see startups pushing boundaries and established firms expanding their reach, creating fertile ground for investment. Next up is infrastructure development. Many emerging markets are undergoing significant urbanization and modernization efforts. This translates to substantial investments in roads, bridges, ports, and other critical infrastructure. For investors, this sector provides a stable and long-term opportunity to support and benefit from nation-building activities. Lastly, we have consumer goods. The rising middle class in these markets means increased disposable income and growing demand for consumer products. From electronics to everyday household items, the appetite for modern conveniences is driving growth in this sector. By focusing on these key areas, technology, infrastructure, and consumer goods, you position yourself to capitalize on the robust growth these markets are experiencing. As we move forward, you'll see how these sectors not only offer high returns, but also serve as pillars for broader economic development. Stay tuned as we next explore the economic growth trends driving these opportunities. We'll uncover what makes these markets tick and why they are gaining traction among global investors. As we dive into the economics of emerging markets, it's crucial to understand why these regions exhibit some of the world's highest GDP growth rates. The significant rise in GDP can be attributed to a burgeoning middle class, driving consumer demand and contributing to steady economic expansion. One of the most remarkable trends we're seeing is urbanization. Cities in these markets are rapidly growing, creating hubs of economic activity and innovation. This urban growth spurs infrastructure development, enhances productivity, and provides new investment opportunities. The rising middle class brings about changes in consumption patterns, with increased spending on goods and services previously out of reach. This demographic shift signals a promising market for businesses looking to expand. Understanding these factors helps investors better gauge the potential returns and inherent risks in these economies. As we move forward, you'll see how these elements not only shape the economic landscape of emerging markets, but also create viable entry points for savvy investors. Get ready to explore deeper and discover the pivotal role these factors play in shaping the future of global economic growth. Now, let's delve further into identifying the potential investment opportunities that stem from this growth. As we navigate the expansive landscape of emerging markets, it's crucial to identify the inherent risks that could impact your investments. Among these risks, political instability stands at the forefront. From sudden changes in government policies to unexpected political upheavals, the uncertainty can create a precarious environment for investors. Currency volatility is another significant challenge. Fluctuations in currency values can drastically affect returns, turning potential profits into losses overnight. This unpredictability demands a keen eye on foreign exchange movements and often necessitates sophisticated hedging strategies. Regulatory challenges further complicate the investment landscape. Emerging markets often have evolving legal frameworks and regulatory environments that can be difficult to navigate. These can include changing tax regulations, investment restrictions, and compliance requirements that must be rigorously adhered to. Despite these challenges, understanding and mitigating these risks is essential for any investor looking to capitalize on the growth potential of emerging markets. As we move forward, you'll see how to strategically address these risks and leverage them to your advantage, ensuring a well-rounded and informed approach to your investment strategy. Let's explore a real-world example of a successful investment in an emerging market and the factors that contributed to this triumph. Imagine venturing into an emerging market with all its uncertainties and potential. Our story begins with a keen investor who identified a unique opportunity in the technology sector of a rapidly growing economy. Through meticulous research and a deep understanding of local market trends, the investor was able to pinpoint a tech startup with promise. Key factors such as a talented team, innovative product offerings, and a solid business model caught their eye. But it didn't stop there. Building robust local partnerships was instrumental. These alliances provided not only crucial market insights, but also navigational tools through regulatory landscapes and potential challenges. Additionally, sustaining a long-term vision and not expecting immediate returns allowed the investment to weather initial market volatility. The investor's strategic approach, emphasizing diversification and risk mitigation, paid off. The tech startup flourished, capitalizing on the burgeoning demand for technological solutions within the region. As revenues soared, so did the confidence of other potential investors, heralding a new wave of interest in this emerging market. This case study underscores the essence of successful investments in these markets: thorough research, strategic partnerships, and a long-term perspective. Up next, we will dive into expert insights on mitigating risks and navigating the intricate dynamics of emerging markets. Stay tuned. Welcome to our segment on expert analysis, focusing on the risks and mitigation strategies associated with investing in emerging markets. Investing in these rapidly developing regions can offer high rewards, but it also comes with significant challenges. To navigate these, we turn to insights from seasoned experts in the field. According to financial analysts, the foremost risks include political instability, currency volatility, and regulatory challenges. Political instability can lead to sudden policy changes, which might impact market stability. Currency volatility, on the other hand, poses a threat to investment value due to fluctuating exchange rates. Additionally, regulatory challenges must not be underestimated, as inconsistent or unclear regulations can impede business operations and growth. So, how can investors mitigate these risks? Our experts suggest a multifaceted approach. First, conducting thorough due diligence before making any investment is crucial. This involves understanding the political climate, regulatory environment, and potential currency risks of the target country. Second, diversifying your investment portfolio can offer a safety net. This means not putting all your resources into a single market or asset class, but spreading investments across different sectors and geographic locations. Diversification helps cushion the impact of any one sector's or market's downturn on your overall portfolio. Third, partnering with local entities can provide valuable insights and on ground knowledge that are indispensable for navigating unfamiliar markets. Local partnerships can help mitigate regulatory uncertainties and enhance market entry strategies. Finally, adopting a long term investment perspective can often balance out short term market volatilities. Long term investments benefit from the compound growth of sectors like technology, infrastructure, and consumer goods, which are on the rise in emerging markets. Our next segment dives into a Q&A session where experts tackle the most pressing questions from investors like you. In this segment, we address common concerns and questions from investors about emerging markets. Many investors wonder about the stability of these markets given political and economic fluctuations. It's natural to question how geopolitical events might impact investments. One of the most frequent inquiries revolves around currency volatility and its potential effects on returns. Investors also seek clarity on regulatory environments, often characterized by differing standards and unpredictable changes. Experts stress the importance of thorough due diligence and understanding local market dynamics to navigate these complexities. Additionally, questions about exit strategies are common, reflecting concerns about market liquidity and the ability to repatriate profits. Our experts emphasize the value of having tailored strategies that account for specific risks in individual markets. By addressing these concerns head on, we aim to provide a comprehensive understanding of the hurdles and opportunities that investors face. As we move forward, you'll see how diversification and careful planning can play crucial roles in mitigating these risks. Diversification is key to managing risks in emerging markets. By spreading investments across various sectors and regions, you can enhance stability and reduce exposure to specific market swings. First, consider allocating funds into different types of assets, such as stocks, bonds, and real estate. This balances the risk across multiple investment categories. Next, look at geographical diversification. Investing in a variety of countries can protect your portfolio from regional economic downturns. Diversification within sectors also matters. Don't focus solely on high-growth industries. Include more stable sectors like consumer goods and utilities to create a balanced portfolio. Finally, keep an eye on emerging trends and adjust your investments accordingly. The key is to regularly review and rebalance your portfolio to ensure it aligns with your financial goals and risk tolerance. As we move forward, you'll see how long-term investments can further solidify your position in these dynamic markets. In the landscape of emerging markets, long-term investment stands out as a smart strategy to balance short-term risks while harnessing growth opportunities. One of the primary benefits of a long-term approach is its ability to smooth out the volatility often inherent in these markets. Instead of reacting to short-term fluctuations, investors can focus on overarching trends that signal sustained growth. A key strategy for long-term success in these markets is thorough research and staying informed about the local economic environment. Understand the historical context and monitor continuous development. Patience and perseverance are your allies here. Additionally, diversifying within the investment can mitigate risk further. Spreading investments across various sectors or regions within emerging markets can provide a buffer against isolated downturns. Embracing technological advancements and infrastructure projects represents forward-thinking areas ripe for long-term gains. Remember, long-term investing isn't about quick wins, it's about sustained exponential growth over time. Stay tuned as we unpack more strategic insights to maximize your success in emerging markets. Investing in emerging markets can indeed seem daunting due to the inherent risks. However, one viable strategy to mitigate these risks is forming local partnerships. By collaborating with local businesses and stakeholders, you gain invaluable insights and a better understanding of the local market dynamics. These partnerships can help you navigate the cultural, regulatory, and economic landscapes more effectively. Establishing such local partnerships involves identifying key players in the market, participating in local business networks, and fostering mutually beneficial relationships. This approach not only reduces your exposure to risks, but also opens doors to new opportunities that might otherwise be inaccessible. By leveraging local expertise and building a robust network on the ground, you can make more informed investment decisions and enhance your potential for success in these markets. As we move forward, you'll see how other strategies, including diversification and long term investment, can further secure your endeavors in emerging markets. Building local partnerships is just one of many steps that, when combined, pave the way for more resilient and informed investment strategies. To recap, investing in emerging markets offers significant opportunities, but also comes with inherent risks. The potential for high returns is balanced by challenges such as political instability and currency volatility. However, effective strategies can mitigate these risks. Diversification is essential, allowing you to spread investments across various sectors and regions. A long-term investment approach helps to navigate short-term fluctuations and capitalize on growth over time. Additionally, establishing local partnerships provides invaluable insights and reduces entry barriers. By understanding and applying these strategies, you can better manage the complexities of investing in emerging markets. Up next, our experts will share their final thoughts and encouragements to help you consider the potential of these dynamic markets. As we reach the end of our journey, our experts have a few final thoughts to share. They believe that now is a pivotal time for investors to consider emerging markets. While the road may seem uncertain, the growth potential is immense. Our experts urge you to take the time to explore these opportunities, weighing the risks and rewards thoughtfully. They emphasize that investing in emerging markets isn't just a financial decision. It's a chance to be part of something bigger. Countries on the rise, industries evolving, and economies transforming. Continue to educate yourself and stay informed. The future of global investment lies in understanding and seizing the potential of emerging markets. Next, we invite you to take action and begin your investment journey. Now is the time to explore the opportunities in emerging markets. You've learned about the high growth potential, the risks, and the strategies to navigate these dynamic landscapes. The next step is to take action and embark on your investment journey. Visit our website for more detailed information and valuable resources to get you started. Don't miss out on the potential that emerging markets have to offer. Start investing today and be a part of this exciting global growth story.